James Hardie kicks off the profit reporting season in spectacular fashion. Business sentiment holds up despite all the rate rises, and more people watched the Matildas win their quarterfinal against the Danes on Monday night than any other show this year. Welcome to Fear and Greed Business News, Australia's best business podcast. It's Wednesday, the 9th of August, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show today, you are speaking with Tony Pearson, the CEO of all things, mattress company AH Beard. This is about neo-consumers.
Yes, now being new economic order consumers. It's a way of thinking about customers. So we are talking to a bed manufacturer, but we do not talk about bed manufacturing at all. In fact, it's really nice to interview someone who just doesn't try and spruik their own product. Tony's a great guy, and he talks about how he thinks about marketing to consumers and these new economic order consumers, neo-consumers. Basically, people who have a frame of mind that they want to spend money. I found it one of the most interesting conversations I have had all year.
Yeah, absolutely. And this is data that's used by brands like Qantas and Macquarie Bank and Lexus and David Jones and the like. So it's a really interesting kind of perspective on retail. So it is definitely worth a listen. It's coming up a little bit later on. But the main story this morning, Sean, is a big one. It was day one of the June half earnings season, and the bar has been set high, I would say very high, by James Hardie. Its share price jumped 16% after the building materials company said it was able to expand profit margins.
It was a great example of what's going to matter this profit season, pricing power. With inflation still really high and wages rising faster than they've done in years, will companies be able to pass on higher costs to customers? In James Hardie's case, the answer was a resounding yes. It lifted prices by 12% in the final 3 months of the last financial year. Profit margins for its operations in this region hit an all-time high, even though volumes fell slightly. Now, this is a company that supplies products like plasterboard and wall cladding to the housing construction market in Australia. That's a market that hasn't been doing very well recently, yet James Hardie has been able to push through these price hikes. By the end of the day, James Hardie's share price closed up 14%. It wasn't all good news. Chief Executive Aaron Erter said there's less activity in the renovation sector, with people sitting on the sidelines thanks to higher interest rates, and the group doesn't think it can repeat the exceptional performance of the last quarter. However, when your share price on the day you release earnings finishes up 14%, that is a good outcome.
So earnings season is obviously now underway, Sean. Will there be more kind of James Hardie style results over the next few weeks from other big Australian companies?
Well, it's a good question, but I don't think many companies will be able to push prices up like James Hardie did. Pricing power, costs, especially around wages, and profit margins will be front and centre as most of Australia's largest companies report over the next 3 months. In fact, Michael, I'm going to predict that no large cap stock on reporting day will rise by as much as James Hardie did yesterday. There you go.
Oh, I love a solid prediction. This is good. Now it gives me something to mark every day just to see how right you were.
Well, I mean, 14% is such a big jump on your earnings day. It's probably not that big a leap that I'm making there. Anyway, look, reporting season will be good fun, always is. It'll tell us just how well the real economy is travelling. Commonwealth Bank, that's out today. That's the big one.
All right, James Hardie aside, how did local markets perform yesterday?
The S&P ASX 200 closed flat at 7,311 points. It started the day higher following a good lead-in from Wall Street before ending the day at its lows. James Hardie obviously is one of the best performers of the large caps. Otherwise, REA jumped nearly 3%, while QBE, Aristocrat and CSL all rose more than 1%. The banks were mixed, so too the big miners, while the retailers were generally lower. Telstra was one of the worst of the large caps, finishing down 0.7%. Lots of corporate news coming out. One notable is Coronado Global Resources. Its share price tumbled 11% following a disappointing earnings update with rising costs and smaller than expected dividends. Revenue was down 25% in the 6 months to June 30 amid falling coal prices and weather-related challenges.
All right, and what about international markets?
There was more bad news out of China, with that country's exports falling for a third straight month in July, while imports also tumbled. China's economic recovery this year was expected to be underpinned by strong consumption. When imports tumble, that suggests there isn't strong consumption. Momentum is definitely waning as confidence and domestic demand remains weak. Oil prices remain steady at pretty high levels, mind you. Gold's off a bit, trading around $1,930 an ounce. And of course, the day before I head to the US for a week, I'm delighted to say the Aussie dollar is trading at 65.3 US cents, close to its lowest level in 2 months, thanks to that Chinese trade data. I'm not bitter though, Michael. I'm not bitter.
Has it ever occurred to you, Sean, because this happened last year when you went on a brief trip to the US, that it actually has nothing to do with Chinese trade data. It's got nothing to do with interest rates or inflation or financial markets. It is, in fact, entirely due to you.
It's karma.
Yeah, I suspect it might be.
The currency gods out there saying,
Oh. Sean's trying to go overseas. Let's make it a little bit more expensive for him.
this will be a laugh.
Yeah.
Let's push the Aussie dollar down.
All right, we'll be back in a moment with the rest of the day's business news. Sean, two major Japanese energy players will buy a 10% stake in Woodside Energy's $16.5 billion Scarborough LNG project in Western Australia.
It's the most significant aspect of a wide-ranging deal, which includes collaborating on clean energy ventures. The $500 million deal for the 10% stake involves Sojitz and Sumitomo repaying Woodside for their share of costs spent so far on the massive LNG project. It means the Japanese companies will eventually pay about $880 million for the 10%. Woodside has spent years trying to find partners for Scarborough. The deal suggests Japanese investors aren't quite as concerned about government intervention in the gas sector in Australia as has been promoted, dare I say, by some CEOs. Woodside will retain 90% of Scarborough, though it has previously said it could reduce its stake to about 50%.
I mentioned this next one at the top of the show, Sean. Business conditions and sentiment in Australia remain resilient, defying the cooling in the consumer sector.
Yeah, so key measures of demand, profitability and employment in the National Australia Bank monthly survey remained above their long-run average levels last month, while capacity utilisation was higher. Overall business conditions eased slightly while trading conditions were steady. Now, confidence rose 2 points, though it does remain below average. But it wasn't all good news. The survey shows a spike in labour costs and selling prices. National Australia Bank Chief Economist Alan Oster said the jump in labour costs probably reflected wage rises taking effect on July 1, including the minimum and award wage changes. Basically, the upshot of this is it provides ammunition for the Reserve Bank if it wants to lift interest rates next month.
A little less positive, Sean, for the business sector. More than 1 in 10 firms in the retail, hospitality and construction sectors are at risk of going bankrupt in the next 12 months.
Pretty scary. Research from credit bureau Ilion, released to the Australian Financial Review, found 14% of food services firms, 11% of construction firms and 10% of retailers were at high risk of failing in the next year. Now, according to Ilion, a business is at high risk of failing if it's got about a 5% chance of going under in the next 12 months. That's about 5 times higher than the normal business. Ilion used invoice and payment data from commercial entities to rank the companies. Like many of these measures, they're sort of partial forward-looking indicators, so they're well worth listening to.
And I suppose while we're on a run here of fairly gloomy economic news, Sean, consumers remain deeply pessimistic.
We are a miserable bunch at the moment, no doubt about that. The Westpac Melbourne Institute Index fell slightly to 81 points, despite the Reserve Bank not lifting rates for 2 months in succession. Those with a mortgage, perhaps not surprisingly given the other interest rate rises, are most glum. Great word, glum. About 2/3 of consumers surveyed expect more rate rises, and about half of those people reckon there's another 1 percentage point in the offing. Certainly hope not. I'd be glum if that was the case.
In all your years as a business journalist, have you ever been able to use the word glum in a story before?
Yeah, well, I like the word glum because it's what's the word, that it sounds like it means?
Yes.
Onomatopoeia? No?
No.
Can't
dear,
remember.
we're both going to be caught out here.
We are.
Just doing some fast Googling here, Sean, and apparently the word is phonosthemic.
Phonosthemic.
Which is a word where the word actually sounds like the meaning of the word, unlike onomatopoeia, which is where the word sounds like the sound that you were describing.
Like grunt might be onomatopoeic.
Yeah.
But Glum.
is phonesthemic. Like,
right.
like, glitter and gleam and glow and glint and glisten.
What is about the GL words?
It's a list I found online, Sean. I'm not making these up as I go.
It's glorious, Michael. Glorious.
Yes. Look, I feel like we've gone off on a tangent, hopefully a useful tangent, and maybe that will come up some point in a pub trivia night. Unlikely, unless you're going to a very kind of
boring,
dull trivia night. Sean, moving on. July marked the 35th consecutive month of rental growth across the country, which is the longest streak since 2013.
Surging immigration and a severe shortage of homes is pushing up prices. According to CoreLogic, rents were up 0.6% last month, taking the total annual rental increase over the 12 months to the end of July to 9.4%. That is well above the most recent CPI reading of 6%. The good news, according to CoreLogic, is that there are signs that rental growth is easing. In fact, last calendar year, rents were up by more than 10%. They're now at 9.4%. Let's hope for people who are renting, let's hope these numbers continue to fall.
Yeah, indeed. Now, Myer's share price tumbled 14% yesterday after it said second half sales growth has ground to a halt on the back of higher interest rates.
Myer's financial year ends July 31. So yesterday was not the final result, but a profit warning, effectively. Myers said it will make a very small second half profit of between $4 and $8 million, with sales up just ever so slightly. For the full year, though, sales are up nearly 13% to $3.4 billion. That's above pre-pandemic levels. The profits expected, this is for the full year, to come in at about $70 million. That's good. But Michael, a good time to remind listeners, share prices are priced on future earnings, not past earnings. So having a good last year doesn't matter as much to investors as to what management says is going to happen. And that's why Myer was sold off yesterday.
Now, I love stories about Canva, Sean, because it's just such a remarkable Australian company. And Canva investor Blackbird has sold some of its stake in the company, valuing Australia's most valuable private tech firm at $25.5 billion US.
Yes, so the valuation is big, but it is down 36% from its peak of $40 billion US in September 2021. Co-founder Cliff Obrecht described the valuation as solid compared to other software companies, many of whom have been forced into mass layoffs due to the deepening tech downturn. Now, Blackbird, the fund, it invested $3 million into Canva about 10 years ago. That shareholding is now worth over $1 billion. That's a good return.
Oh, isn't that a remarkable statistic?
That is great.
Now, Sean, this is a fairly controversial one, this one. The West Australian government has scrapped the state's Aboriginal cultural heritage laws and promised a simpler system following really a very strong backlash from landowners.
Premier Roger Cook said the laws would revert to the original 1972 laws with simple and effective amendments to ensure we don't have another Yukon Gorge situation. Now, the Act was introduced in 2021 by former Premier Mark McGowan in response to Rio Tinto's destruction of the Yukon Gorge caves in 2020, but really it's been regarded as too onerous. The laws required landowners to undertake in-depth heritage assessments and apply for permits even for minor works on any piece of land larger than 1,100 square metres. Often that was very costly. According to the Financial Review, they also drove down support for The Voice, with the No campaign claiming the laws were the sort of thing that would arise from having an Indigenous advisory body such as The Voice. Absolute bumpkin, of course, still didn't help the Yes campaign. Now, Roger Cook has scrapped the laws.
Now, Sean, the Matildas' victory over Denmark in the Women's World Cup on Monday night drew the biggest television audience of the year, beating State of Origin Rugby League games and even last year's AFL Grand Final.
The Matildas' 2-0 victory drew a 5-city metro audience of 2.294 million viewers on 7, according to figures released by ratings agency Oztam. It beat the State of Origin Game 1 this year, which had held the top spot. That drew 1.98 million viewers across 5 cities. The Matildas game was bigger than the last year's AFL Grand Final. That had a metro audience of 2.179 million. Now, Seven said the audience for the match peaked at 3.75 million viewers. That's measured as a number of people watching at least 1 minute during the broadcast. Talk about taking over. The Matildas, not only did they win, they're also taking over free-to-air broadcasting. Go the Matildas.
Turning to international news now, and New Zealand's government has partnered with US investment firm BlackRock to supercharge its efforts, Sean.
Nice.
Yeah, it's very nice, isn't it? To become one of the first countries in the world to reach 100% renewable electricity.
The two announced a $2 billion New Zealand dollar fund, that's about 1.9 billion Aussie, that will provide access to greater pools of capital for New Zealand businesses to accelerate investment in green energy, such as solar, wind, green hydrogen, battery storage, etc. Now, New Zealand already generates more than 80% of its electricity from renewable sources, such as hydroelectric dams. It aspires to reach 100% by 2030. That will require significant investment to replace fossil fuel-fired sources. The announcement comes just 2 months out from an election. Chris Hipkins is facing the voters for the first time. He took over from Jacinta Ardern just a couple of months ago. The government's hoping to burnish its green credentials. This won't hurt.
Finally, Sean, this one's perhaps a little bit unexpected. Zoom, the video conferencing company, has joined the parade of companies requiring workers to come back into the office.
You have to laugh at this story.
I don't really get it. It doesn't make any sense to me.
So the San Francisco-based software company told employees who live within 50 miles of one of its locations that they have to come into the office at least 2 days a week. The new work requirements, Zoom says, are a structured hybrid approach that are designed to put in a better position to use our own technologies, continue to innovate, and support our global customers. Kind of defeats the purpose, I would have thought. Now, it will still use Zoom products for remote meetings, according to a report in the Financial Times.
You'd hope so, wouldn't you? It'd be a little bit of a worry if they suddenly started using Google Meet or Microsoft Teams or one of those ones.
Then you can't think this will help its share. This is an amazing company during the pandemic because its share price jumped about 15 times from its initial public offering price. It jumped 15 times mid-pandemic. It was worth about $140 billion US. It's down about 85% since then. I'm sure the idea that Zoom employees have to go back into the office isn't going to help things.
I can't imagine it will. That is a cracker of a story to finish on, Sean. Up next is the Fear and Greed Daily interview. You are speaking today with Tony Pearson, CEO of mattress company AH Beard.
All about marketing to people who like spending money, new economic order consumers. As I said at the top of the show, one of the most interesting interviews I've done all year.
Yeah, it's a good one. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And Sean, you know what today is?
Wednesday,
that is correct, which means today is How Do They Afford That Day, the day when our sister podcast comes out every week on a Wednesday, and it is all about kind of making your money work a little bit harder for you. This week's episode is actually about financial burnout and about the fact that the cost of living has been rising so much and everyone's under so much pressure to try and keep on top of their money and keep making good investment decisions, all of that we are seeing an increase in the number of people suffering from financial burnout. So we talk about what it is, what to look out for, and how to kind of reset your finances to get yourself out of that hole. You can find How Do They Afford That wherever you listen to podcasts. Thank you very much, Sean.
Thank you, Michael.
It's Wednesday, the 9th of August, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X, and Facebook. I'm Michael Thompson, and this is Fear and Greed Business News. Have a great day.